Good afternoon and welcome to the webinar, Francophone Africa, a Cote d'Ivoire, Senegal and Cameroon Real Estate Market Review. This webinar is brought to you by the API Summit Virtual and Certain Group and forms part of our preview webinar series leading up to the API Virtual event taking place between 28th of September and 02 October later on this month. This year's API Summit gathering is taking place online and will provide you with 5 days of networking, content, and leading insights, as well as access to the Africa PropTech Forum and API Awards. We are expecting over 600 attendees and have already confirmed over 100 speakers for the event. So for more information or to register, please visit our website at API Summit, the API Summit website. I would now like to move on to today's proceedings. First up, we have Taslim Ngom, Principal, Certain Group Senegal, who will start off today's session with a presentation on the exciting new project. We will then move on to a panel discussion being moderated by Ivan Cornett, Managing Partner at Latitude 5, who will also introduce our esteemed panelists. Thank you all for joining us today, and a big thank you to Certain Group for your support in helping us put this webinar together. I'll now hand over to Taslim, who will begin with a presentation and then call on the moderator to kick off the panel discussion and introduce the rest of the panel. Thank you, and I hope everyone enjoys.
Thank you, Kafir. Good morning, everyone. I'm Taslim Ngom. I run the real estate development practice here at Certain Group. And I'm excited to be here with you guys today and look forward to giving you a quick flyover the Senegalese market and one of our projects over the next couple of minutes before jumping into the panel. So if you could please start the presentation.
Certain. Its multiple real estate projects developed, providing over 200,000 square meters over the last few years.
It's a five-fold growth story over the last 5 years. It's currently 30 ongoing projects in 3 countries in the Francophone West Africa sub-region. It's more than 20 years of experience combining local expertise and the mastery of 6 complementary professions. It's more than 170 direct employees, 500 indirect jobs, and 80 partners, whose hearts beat to the rhythm of an emerging Africa, reimagining and delivering the future of Africa's built environments. It is projects that are innovative, beautiful, refined, functional, and durable. We are Certain, a corporate citizen and an aspiring continental organization, a group which lives its social and environmental responsibilities. Certain, a passion for challenges, an uncompromising stance for quality.
Thank you. Just can go back to the presentation. There you go. So, like I just said, over the next few minutes, I'd like to give you a quick overview, more of a flyover. The Senegalese real estate market, and then we'll use the panel hopefully to go into greater details with the rest of my esteemed co-panelists. We just went through the presenter profile. I'll just add a couple of more data points so that you guys know what we've been doing in Senegal and in Mali and Ivory Coast as well over the past few years. Then we'll do the market overview, and then last we'll speak briefly about our project I told him about. I always like to start with this little quote. This is from Paul Collier. It says that between now and 2050, Africa's urban population will triple, meaning that 2/3 of the urban space has yet to be built, and the vital struggle is to get that coming 2/3 better than the existing third. I guess that underpins everything we do, us as real estate players. Beyond the economic aspects of things, there's really a building up of our country's infrastructure that's in play. So that's what gets excited. That's what gets us excited about what we're doing at Certain. So I always like to start with this quote. The video is pretty self-explanatory. 22 years track record. We're present throughout the value chain of real estate development. We're in 3 countries right now and looking to expand beyond that. We've developed quite a few projects and have delivered significant value for over the last few years across different asset classes, and we have a pretty interesting portfolio of projects going on right now. So that's just a brief overview of the group. Now, going into the Senegal market, and again, this is going to be really a quick flyover. We do apologize for the fonts here. I think the platform didn't translate properly the presentation. But we wanted to start by sharing who is the real estate market in Senegal, who represent different users of real estate in Senegal, and we think that you can categorize them in 6 different groups. So obviously you have the local population. So the indigenous, we're about 17 million Senegalese who live in the country. That population is growing at a rate greater than 2.5% recently, and we should hit 25 million by 2025. The median age is 20 population, but half of it is actually active in the workforce. It's about a 50-50 split between men and women, and only 5% are over 60 years old. So there's a huge economic potential in what we call the demographic dividend for us. If you add to the locals, the expatriates that live in Senegal, there's, depending on the different sources of statistics, you have between 200,000 and 300,000 expats that live currently in the country. Beyond that, and what I will do throughout the presentation is, as we're presenting the market, obviously kind of think about the impact of the COVID and how it changes things for these different components of the market. So obviously, the 17 million Senegalese people are here. Thankfully, the portion of the population that's old and could potentially be impacted by the disease is limited. So we don't have too much of an impact on that particular space in terms of numbers, and then we'll get to the economic impact later. The expats, obviously there's been a bit of an impact in the fact that a lot of people return home, but we're seeing a wave back, and that's tied as well to the oil and gas discovery and operations that are supposed to be started in a couple of years' time, and we'll talk about this as well. The third bucket of users of real estate are the tourists. Obviously, in 2019 we had 1.7 million tourists come into the country. Obviously, 2020 is going to be a very different story, but as we'll see later, there's huge potential to get that number up, in the next few years. That's on an individual basis. If you start looking at business entities, there was between 400,000 and 500,000 businesses that were identified in the country. We have 3 very big ones that are listed in the stock exchange: a bank, a telecom company, and then 95% of that is SME. So it's a big bunch, but a lot of small businesses. If you add to that the representation of the several international institutions that we have here, World Bank, IFC, IFTB, UN agency, they've chosen Senegal as their headquarters for the region. So we have a huge we have a huge cohort of those institutions. And last but not least, as from a real estate user's perspective, we have the central government who rents out a lot of space and who's developing and managing a lot of real estate as well. And by some estimate that we're giving, they're paying more than 25 million actually in rent on a yearly basis today, and they're managing over 500 million USD, obviously in assets, some of which are actually not performing. So that's another opportunity we'll talk about later. So this is who constitute the market. Now we're going to look briefly at where is the market. So 50% of those people that we just talked about live in cities. In urban areas, going back to the initial quote, that's going to continue growing. And real estate infrastructure needs to be developed in order to be able to welcome all that influx, particularly of young people looking for professional opportunities. In the table below, you can see that on a very small percentage of the land, a huge part of the population is concentrated, and that's around Dakar, Thiès, and Diourbel. So that's where people are concentrated, but with what you see on the right, infrastructure that's being developed and mobility being improved with the highway infrastructure and the rapid train project the Rapid Bus project, the airport that was delocalized from Dakar, and the new ports that are being developed, that's opening up a lot of the space throughout the rest of the country. What's important here as well is we have 531 kilometers of coastline, which provides a huge opportunity for resort type development in the hospitality sector. For the other commodities, from an access to water point of view, from the electrical point of view and a network point of view, we're doing pretty okay. Obviously, there's still a lot of room for improvement, but again, making sure that the projects that are going to be coming up next are structured better is going to be a key challenge for developers. And again, from a COVID impact point of view, I mean, we don't see that much changing. Maybe some of the infrastructure projects were delayed a bit, but most of the elements remain the same. So how's the market doing economically? Obviously we've been one of the fastest at an average of 6.36%. It's a fairly diversified economy, mostly services. Obviously, with the discoveries of oil and gas, we're supposed to kind of even accelerate that growth, but obviously COVID hit, and then we're expecting growth to decelerate this year between 1% and 3%, which is still positive and doing a lot better than a lot of places in the rest of the world. Beyond the economy as a whole, all the identified businesses have had revenue of over $18 billion, and that's the last available statistics for 2016. And then if we go down to the individual level, that's where you kind of start seeing the average revenue level for a Senegalese, that ranges from 4,000 USD per year on the very low end to 20,000. And as a result, Senegal is classified as a lower middle income country. So how easy is it to address the real estate needs of that market that we just talked about? And we'll look at it from three different lenses, from land, delivery capabilities, and capital. From a land point of view, land ownership is freehold and available to foreign investors. Mostly in urban areas, land is titled and registered, so it's the process to acquire it is actually fairly straightforward. However, what you can see a lot of that. From a delivery capability, so land it's fairly easily accessible, albeit getting a bit too expensive. But still available and affordable outside of the metro areas. Delivery capabilities, we have savvy technical services providers. We kind of pride ourselves in being one of those. However, there's a lot of different players. The building material ecosystem is still being developed, so you'll have to kind of go get a lot of materials from overseas in order to be able to develop here. Capital is where most of the challenges are. It's available, but the conditions are sometimes very difficult to make it accessible. We have short maturities, and even though we have relatively lower cost of capital compared to some of the other places in Africa, it's still a bit too high compared to the nature of real estate. Equity capital is very rare, and we're starting to see, but it's not there yet, some more sophisticated capital structure and securitization starting to take hold. But that's going to be some development for the future. And all of that is represented in the doing business indicators, where we fare pretty okay in terms of doing construction permit and getting credit. So all in all, it's a market that's easily addressable, let's say. As a result, who's currently playing in the market? Like we said earlier, either from a technical service provider or from a developer, it's an extremely fragmented market in terms of players. From a public sector point of view, we have three major state players, HLM and SICAP, that are developers, and then the AGPBE, who actually manages property that's owned by the government. We do have a handful of structured players, but a lot of informal. And then we see more and more international players coming into the country from all horizons. And what are they doing and what are they not doing, which speaks to some of the opportunities that we have in the market. The focus is primarily on residential. There's a 300,000 structural gap in supply in the market. that the government has been actually trying to tackle. There's a program of 100,000 homes per year, for the next 3 years rather, that we're implementing. And that's part of the economic restart plan right now, is really putting a focus on that in order to kind of come out of this COVID crisis. If we just look at the two public developers that we just mentioned, SNHM and SICA, in 2018, they delivered 3,500 properties, except that 75% of those were not build homes; they're just parcels. So that kind of creates a lot of self-construction, which is not the greatest, but it speaks to the opportunity of coming and addressing the market where today people don't have a lot of options. So there's a sizable unaddressed need in the mid-end and affordable housing. If we look at the office asset class, Class A is quasi-inexistent. We're trying to address that with the project that we'll talk about a bit later. But it's a huge opportunity, particularly given that we'll have more structured players that are going to be coming into the market with oil and gas sort of operations. Class B and C are the most highly in demand given the economic profile that we talked about earlier. But there are very, very, very few structured options that are available, and lots of houses and apartments are repurposed for that. So there's opportunities there as well to develop those assets. From a retail point of view, the only kind of legit mall, let's say, to a certain extent, is Sea Plaza, and that's tackling the high end. A lot of things below that are just not addressed yet. We have traditional markets that are being restructured, but Auchan is trying to tackle the mid end, but mostly groceries. We don't have any kind of little clin d'oeil to my friend Sheikh from Abidjan. We don't have any Cosmos Yopougon like development here, and there's a huge space for that. From a hospitality point of view, and these three different things that I just talked about, from a COVID impact point of view, it's very minimal. Like I said, maybe some delay in the opportunities and the value that they create, but it's still there, and it's not going anywhere. From a hospitality point of view, this is where we kind of have the real impact. But pre-COVID, we had a huge pipeline, about 1,000 keys, and it's yet to be seen what adjustments are going to be made. But like I said earlier, we have 531 kilometers of coast, beautiful coast, and it has huge, I think, hospitality development potential. You've heard recently about certain new development like Icon City that are trying to tackle that, but that's still a market that's up for grabs, and that's going to be used by not only local from the country, from the region, but from international destinations as well, or sources as well. And last but not least, the alternative sector, where you have, obviously with the impact of COVID, health infrastructure needs to be developed. Student housing, like I said, we have a young population that a lot of them are students coming out, going into the professional world, and data center, which is a huge need right now with the development of the internet infrastructure and the more sophisticated needs of more structured players. So that was just a flyover. I think I'm getting a little long here, so I'll just quickly skip through these. So Tolé is one of the projects that we're doing. It's a conference center and an office tower. It's about 48,000 square meters. We started it towards the end of 2019. It's a third pre-let. We're pretty excited about this project. We're doing it in partnership with the Caisse de dépôt et consignation. And we have, we're seeing huge interest and huge demand for the product. It's going fairly well. We started, and we have 18 months more left to go. The impact of COVID has just been a 3 months delay in construction, but we're still seeing a lot of interest in coming and letting some of the space that we're putting out there. So that's just to say, the market is here. It's still vibrant. There's a lot of interest in this particular space and in all of the other asset segments that asset classes that we talked about. Sorry, I was a little over, Ivan, but I'll turn it over to you so that we can get on with the panel.
Thank you, Taslim. This was actually a very interesting presentation. Can I ask each of the panelists to switch on their camera and audio now? We have Nicola.
Hi.
Hilaire, can you switch on your camera? We lost him. That's fine. We're going to give him a little bit of time to come on board. First of all, I'd like to thank CAFE and API Events, of course, for organizing this pre-Africa Property Investment Summit webinar, and obviously thanking also Taslim and Satem for sponsoring this event. As you all know, we'll focus today on the Francophone countries and projects that, despite the COVID-19 crisis, are being developed and completed in the three major regional countries, i.e. Senegal, Cote d'Ivoire in West Africa, and Cameroon in Central Africa. A few thoughts before we dive into real estate with our panelists. As you know, say for some more mature economies such as South Africa, Egypt, and Morocco, the African continent has been, as far as we know, moderately hit by the pandemic. We are counting today about 1.3 million reported cases in Africa. That's about 5% of the cases worldwide. And last week, WHO just reported that the outbreak in Africa may have passed its peak. Setting aside the accuracy of the reported numbers, and I think it's a subject that needs further discussion, but not in this forum. Several explanations have been raised to explain those low numbers. First of all, the speedy reaction of the African government to impose sanitary measures, thanks to experience in previous pandemics, such as the Ebola outbreak between 2014 and 2016. And another explanation is the young age of the population. That being said, in addition to the healthcare impact, it is important to understand that the pandemic does and will exacerbate an already dire situation for many African economies. Governments, in addition to cash injection in their health system and to contain the virus, have also implemented emergency measures and recovery plans to sustain their economies. Obviously, the slowdown of the economies will also have a significant impact on the tax revenues. According to the African Union, for the first time in decades, we'll see on the continent a recession this year. We're expecting a negative 2.1% to negative 4.9% GDP growth. Much more disturbing, actually, figure per the African Development Bank is that the COVID pandemic should also push between 28 and 49 million more Africans into extreme poverty. We're always talking about the growing middle class. We need to take that also into consideration. Another point, which is fairly important, especially in Francophone Africa, 2020 is a very sensitive year on the political front. We have elections coming up in Guinea, Burkina Faso, in Cote d'Ivoire, and Nicolas just expect a question on that. Niger, and the first regional election in Cameroon at the end of the year. Not to mention last month's military coup in Mali. But quite interestingly, many real estate projects already under construction didn't stop during the crisis. All asset classes are still being developed. Even the worst hit by the pandemic, we were mentioning hospitality, it is the case, including retail. We will review some of those projects, which are sponsored by the companies represented in our panelists. So we already know Taslim with the Tour de Mamel developed by Certain Group in Dakar, Senegal. We have Nicolas Moreau also on the panel, Tour First developed by Groupe Duval in Abidjan in Cote d'Ivoire, and Inler Dogmo developing the Douala Grand Mall and Business Park by Actis in Douala, Cameroon. I think it is interesting. We have, with our three panelists, three different approaches to real estate, which is particularly important, especially in those uncertain times. Taslim is representing a developer, Ile a private equity investor, and Nicolas, I'm not sure we can say that, but I would say a long-term family office investor.
Okay, developer.
We've we've heard about Taslim. I think it's still important for our audience to understand a little bit more about what Nicolas is doing in Côte d'Ivoire and Hilaire in Cameroon. Maybe Nicolas, if we start with you, can you just introduce very quickly Groupe Duval? I'm not sure people know this French group. What's your expansion strategy in Africa, and maybe one or two words about the tour first in Abidjan?
Sure. Okay. Thank you, Ivan. So the Groupe Duval is a French family. It's a French company. It's actually, like you said, a family business. It has been created about 25 years ago by Mr. Eric Duval. And today in France, the company became a major real estate player. If you look at it, the group operates almost throughout the entire chain of real estate trades, like property development, property and asset management, project management as well. And we have a few brands or subsidiaries that are known, for example, YouGolf, which is the European number one in terms of managing and operating golf courses. We have Odalis also, which is the European number two in terms of tourist residencies. And for example, Patrimoine and Commerce, which is the French number one in terms of low-cost retail park. Just to give you a few numbers, the company is like around 4,000 people staff. The turnover last year was around 720 million euros, and the company owns roughly around 2.3 billion euros of assets. Regarding our presence in Africa, the company started to look at Africa around 2015, mainly because Mr. Eric Duval was seeing Africa as the land, as a continent of opportunities. And the group opened its first office in Abidjan in 2016. And personally, I took over the management of the African subsidiary in 2018. In Africa, we have two main activities, of course, real estate. We have also FinAfrica, which is a network of microfinance institutions, and a company dealing with boreholes and drillings. For the real estate parts, I have a team here with me of about like 12 people. We don't do resi. We look at professional real estate, so offices, retail, it can be street retail or shopping mall, hospitality, mainly actually with Odalis, which is developing a service apartment product specific for the African continent. So we can look at mixed use project, for example. Like you said, we have one project under completion, which is the first tower in Abidjan. And we have also project under development in Cote d'Ivoire, of course, Senegal as well, Ghana, Togo, Cameroon, and Rwanda. That's the main countries we are looking at right now. So like I said, we are developers and investors as well, so we bring the equity to develop our projects. So I can do a short presentation of the first tower. I think we have a slide actually with a picture of it. Yeah, okay, that's the slide. So this project is located in Le Plateau, which is the business district of Abidjan. It's actually a very nice site, probably one of the best you can get, where you can get the best views over the lagoon of Abidjan. So on this project, you spoke about a long-term investment, and it's true. This one, for example, we signed a 45-year-long lease with an Ivorian family. So why a lease in this case? It's because the family wanted to keep ownership of the land. And they also wanted to keep the existing building. It is known as the former Shell Tower in Abidjan, and this building has been built in the 70s. So our project consists in refurbishing the tower and transform it into a grade A office building. Basically, it has 14 floors, one underground car park, ground floor, 12 upper floors, an accessible rooftop, and it's around 6,000 square meter GLA of office space, which is about 470 square meter per floor. To give you an idea about the costs, excluding all other development costs, I would say roughly it's between 7 and 8 million euros, construction costs only. And for the financing, so the equity is coming 100% from Duvel Group, and the debt financing is coming from Proparco, which is a private sector financing arm of AFD. Regarding the schedule, it's a bit more problematic. We started the work in March 2019, and mainly because of COVID. I mean, we were initially hoping to deliver in summer 2020. We initially pushed back the delivery date to October 2020, and we are now thinking to push it again at the end of 2020.
Thank you, Nicolas. I actually find it very interesting that, you know, most of the time when we're talking about development in Africa, real estate development, we're talking about obviously greenfield. I mean, pure new buildings that's being developed. We have here an interesting situation where we take an existing building and being refurbished. I think can give some ideas to developers throughout the continent. I'm thinking about particularly about Lagos, where usually what's happening is that each time we want to build new buildings, we're moving in another area rather than trying to refurbish or redevelop existing buildings. So that's, I think that's the first, and I found it very, very interesting. I'd like to pass the baton to Hilaire. I'm not sure I want Hilaire to present Actis. I think everybody knows exactly who and what Actis is, but maybe you can talk a little bit about your current strategy in Africa. I know that there's been a discussion not only, I mean, your first, I would say your first activity is obviously development and investments, but we're also talking about creating an income fund at Actis, which is quite interesting, showing also development of the market. So maybe talking about that, a little bit about your expansion in Africa, and obviously a few words on the Douala Grand Mall.
Thank you, Ivan. I had an issue with my connection in the beginning. So as Ivan said, I'm based in London. I work for Actis, covering the continent, even if the focus is on Francophone Africa. I mean, I will say a few words about Actis. So Actis is basically a private equity firm. We invest in mostly in emerging market. We have 30 billion of asset under management, and Africa is one of our key investment market. And our strategy in Africa is divided into 4 separate categories: real estate, energy, infrastructure, and pure private equity. And on the real estate side, as Ivan mentioned, we've been, I will say, the pioneer fund investing in greenfield development. Basically office-led asset and also supermarket. We basically built the first mall in Accra Mall, for example. And in Nigeria, we also did Ikeja Mall, a garden city in Kenya. And we are currently completing Douala Grand Mall in Douala. But the strategy has evolved since we launched the real estate platform. And we are now looking to provide to our investor community a different type of product, and the income fund is one of them. And the key difference between our previous strategy, which was a greenfield strategy, and the income fund is basically on the type of investor. The former strategy, it's a high return strategy where the investor will definitely enjoy, let's say, mid-20 return. But with the income fund, it's a different strategy, and we expect to provide mid-teen return to investor with this new strategy. And the strategy also, it's explained by the fact that the exit universe in Africa is not strong enough. So having built all those iconic projects across the continent, it's not always easy to exit as a private equity firm. That's why we decide to package some of those assets into an income fund and then attract a new category of investors who are interested in the continent.
Thank you. Can you develop a little bit or explain a little bit, just in 2 words, what's the Douala Grand Mall in Cameroon? I mean, what are we looking at?
Yes, yeah, I'm very excited about the project, and it's my baby. I mean, I guess most of you know Douala a little bit. It's the largest city in Cameroon and also the economic capital of Cameroon, with more than 4 million inhabitants. And when you visit Douala, the first thing you realize is that there is not a single leisure place in Douala. And when we visit the country back then in 2014, we decided to build a Douala Grand Mall as a destination mall and also as a leisure center. And it's an 18,500 square meter mall, providing, as I say, a shopping center anchored by Carrefour, a multiplex with 5 cinemas, and also a large recreational plaza for people to hang out in Douala. The project started 3 years ago. The project is fully completed. I think the opening date is early November. We have a small delay due to COVID because the contractor is a South African contractor, and some of the engineers based in South Africa cannot travel for the takeover certificate because of the traffic ban in South Africa at the moment. So we could have opened the mall by now, but that's not going to happen just because of the impact on COVID. But hopefully by, let's say, the 15th of November, the mall will be trading. And we have a lot of international tenants actually joining us on this adventure. Carrefour, Genesis, Eden Park, Pizza Hut, L'Oreal, Yves Rocher. And the mix is also very interesting because we have fashion, food, casual dining as well. In one location in Douala, close to the airport, with more than, let's say, 3 million catchment area.
Okay. I have many questions for you, Ilya, but I think we're going to I think Nicolas and Jasmine are going to get bored if we talk too much about Douala. Quick question for Taslim, actually. The Tour de Mamel, I mean, obviously there's been delay we all went through that. There's been some delays in the construction period and for completion. Was it discussed with CDC or other sponsor to hold on and while waiting to see what's happening? I mean, we see elsewhere in the world and even some projects in Africa where the sponsor just pull the plug basically and saying, let's wait for a year, let's wait for 6 months, and we're not going to do it. It's too risky. We don't know what the environment is. Was it also the same for Tour de Mamel, or there's been some discussion around that?
Thanks, Ivan. Actually, we were looking into in 2 different aspects of it. So first of all, just from the project progress point of view, we're still doing the structural work. So very little imports, a lot of local procurement. So the impact on that was minimal in terms of advancing the project for us. That being said, there was a state of emergency at some point that was instated, and that reduced the amount of hours we could work. So that's what led into the actual delay built in of the 3 months. But why I say we were lucky in the second aspect is because, obviously at the bank's level, there was some dispositions that were taken to alleviate some of the pain for their clients coming from COVID. So our partner CDC was able to go back to the banking pool and say, particular case, COVID, everybody knows it. You guys have some delays from central bank. Pass that on to us. Can we suspend payments for a few months until this thing gets back to normal? So, minimal impact on the advancement of the work just because of where we're at in the stage of development, and the fact that the different financiers on the project were able to kind of give some flexibility to the project sponsor were two things that allowed us to minimize the impact. So yes, there was some, but we're only talking about, like I said, 3 months. One thing that I didn't discuss earlier when I was presenting the project was the size of it. We're about $60 million USD. And it's geared at 64%, and the two different debtors are the West African Development Bank and Bank of Africa, Bank of Africa Senegal, and the rest is equity from the CDC, from the sponsor. So the fact that there was some discussions, but it wasn't something that was going to kind of get to a complete halt of the project. On the flip side, the off-takers are still there. Like I said, it's the third pre-let, but it's pre-let by the sponsor itself, so it's space that they're going to use. That didn't change, and we're still getting interest from other institutional in the space that are saying, because we're looking at a year and a half, 2 years out. Hopefully by then, past the crisis and people are getting back to work. And on that particular last point, we've heard throughout the world the office is dead. That's not going to be the case here. First of all, like there's challenges working from home just because of the social constructs of our societies, and the infrastructure necessary to conduct work properly is not yet available at home. So the office is I don't know. There's things throughout the world about people not heading back to the office. That's not the case here. There's still need for it. Again, like I said, Class A and B, C. So that makes us feel pretty comfortable about the future in that space.
Okay, we'll talk about the market a little bit later. I'd like to stay on the actual construction and project management with Nicolas. Nicolas, what were the challenges that you met, which are partly due to COVID? Obviously, we're thinking about the import of materials. I'm assuming those, like most of projects in Africa, they imported from Europe or South Africa. Was that a challenge for you? And did you meet any other challenges while building during the COVID period?
But actually, Taslim said pretty much everything. If you look at it, in Cote d'Ivoire, there was no real lockdown. We were continue. Not too much constraints, so we were able to continue to work, but with a much lower production rates. We had less workers on site. So yes, in our case, we were not really lucky because the works were more advanced. If you are using local resources, you're fine. If you start to use imports, it's a bit more complicated. And in our case, we had a curtain wall. Part of it was manufactured in France, part of it in Spain, part of it in Dubai, and that was way too much complicated. Basically, the contractor was struggling to deliver the material on site, and that's what I explained. We initially pushed back the delivery date from 3 months, and now we are believing that we will deliver probably at the end of the year. So that's the impact on the construction schedule. And of course, there is a second impact. It's on your pre-letting, because you have to keep in mind that in order to access this kind of debt financing, like Marco, for example, for us, you have to reach a certain level of pre-letting. Like to give you an example, in our case, we had 3 disbursements, and for each disbursement, we have to reach 35, 45, and 50% of pre-letting, which is like very tricky in this kind of situation. Well, Proparco was flexible, and when you look at it, I mean, some tenants we signed term sheet with, they decided to stick with us. Some decided to step back and take some time, knowing also, and you know that you mentioned that there is also an upcoming election period that could create some delays as well. I mean, on your side, it's all right now. It's okay. We're managing it, but regarding the tenants or potential tenants, we decided to be fully transparent and really flexible with them.
Okay. Ida, back to you on the retail side. We are talking in some part of the world about the impact not only of COVID, but in general on the healthcare side and the possible future pandemic and so on, as we've seen on the security side after 9/11. Some changes in design. We made sure that, for example, in airport now, each time you go through an airport, the security is massive. Are we going to see also these kind of changes on the property side and more exactly on the health security side? And I'm talking to you especially on the retail, of course, because with the flux of people coming into a shopping center, I think it's quite important. Is it important? Did you change your design in order to adapt your project to this pandemic? And what do you think will happen in the future from your point of view?
Yeah, thanks, Ivan. A very good question. And on the change, on the impact of the COVID on our market, I would say our market, because I mean our market it's an African market, and it's a different story in Africa when it's come to retail or even real estate, because when the European country implemented the lockdown, I mean, the implication and the impact were immediately felt by the population. But the lockdown wasn't really implemented in some of our market in Africa. Exception maybe of Nigeria, where there were 2-3 weeks curfew. But the reality is that the site of Douala Grand Mall, we kept working even during COVID. But having said that, there were exceptional health security measures that were taken by the construction team: hand sanitizer, masks, and everything, temperature in the morning, and also when the worker were leaving the site. And the design as well didn't change because it was a design and build contract. So the design was already agreed with the contractor, I would say 3-4 years ago. So we didn't have to change the design. And on the market side, I would say this the clear acceleration of modern grocery retail, especially in the market where there's not even one retail center. It's something that's going to happen because people are looking for one-stop shop for consumer wide range of product. And people are also concerned by the safety of the product they are buying. And when you have this kind of center where everything is properly formalized, you also have the advantage of keeping price at a certain level, because I mean, if you look at some market in Africa, price can change from one day to another. In the shopping mall, it's not really the case. So COVID clearly some impact on the construction and probably also on the purchasing power. But we think that the thesis about the modern grocery, either convenience store or shopping mall, is still valid in our market, especially in countries where the sector is still immature, like Douala or the Central African region, which is quite a bit different to Abidjan or even Dakar. I'm not sure if Sheikh is on the line, but Yopougon, for example, in Abidjan, the first mall was built in the 90s, and the size of the city is not really different from the size of the city in Douala. And we are in 2020, and we don't even have the equivalent in Douala yet. And I mean, we're going to open one in a few months, but it's not there yet. So it was a first mover advantage for us, and then we seized the opportunity. And we think there will be some change due to COVID, but those change will be mostly on how to make sure people, customer, and tenant can actually operate in the safer environment.
Yeah. Do I understand correctly when I'm saying that there will be measures taken to protect the consumers or the shops, but it's not a massive change, like for example, temper check or something like that. But there will be no massive changes of design because of COVID and any future pandemic. I mean, that's not the plan or the idea behind.
Yes.
Okay.
Yes.
Okay, very, very good. I'm actually being, and it's a good question, I'm being bombarded with the same question over and over. You people in the attendance do not see that, but I received some emails and questions. And the question is about occupancy and pre-lets. Obviously, it's great that we're all building assets and grade A properties and so on, but we need to fill those assets with tenants. And with COVID, and we know that in Africa, we have a lot of international occupier rather than locals who may be a bit more price sensitive, especially for grade A assets. I mean, asking to each of you, starting with Taslim, I mean, do you see any challenges that you didn't see before? Obviously, occupancy has always been an issue. Marketing is very important. I mean, do you see now even further issue in trying to get people and tenants in the assets, in the property because of COVID, i.e. international players focusing on their own markets rather than looking to expand their business in Africa?
Right. So that's a great question, and you can have two parts of an answer to it. So the first part is regarding, you remember when I talked about the different users of real estate, everybody that comes from outside. So be it the international institutions, diplomatic representations, etc. Part of them are still here and they're not going anywhere. And part of it is just delayed deployment, and I think in particular about the oil and gas players. That's the cohort of the demand that's used to pre-letting, that's looking for Class A, very specific, high quality type of space, and that are saying, we might have to delay our coming into the country by, I don't know, a few months to a couple of years, but we're coming. The oil and gas is here. Somebody's going to have to come and get it out and sell it. That's not going anywhere. Right? And the diplomatic representations are still going to be here, and the international institutions are still going to be here. So as far as that is concerned, you see maybe a little bit of delay, but the intent to come and the scarcity of assets that meet their requirements make it not that much of a challenge for that demand or that pre-let demand to go away. Now, if you look at the local markets, when I said, we talked about earlier the economic capacity of the local market, you only have a few big companies, and most of them already have, and I'm talking office in particular, mostly have their office needs taken care of because they build their own headquarters. Even though the financial sector is looking at revamping some of the offices in which they are. The local market, when you talk about Class B and Class C, which is what they can afford, they're not yet used to pre-letting. So that's a cultural shift where we haven't made the step yet to get those people to come and say, this is a project, it's still in the planning stage. Would you be interested in getting space? People have a tendency to more come and let something that they can see. So in that case, there's no impact just because you haven't seen much of it before. So it's just that risk that you take in the way you structure your project, and then as it progresses, then you start seeing some of the future tenants come in. So all in all, like I said, from the international market, just a delay of a few months up to a couple of years, but that demand is not going anywhere. and then from the local market, you're not really changing any of the habits. I think we still need to get them up to getting used to pre-letting.
Taslim, may I push you a little bit on this? When you're saying interest, are we talking about letter of comfort, non-binding letter of comfort of people, basically, of operators saying, yes, yes, I'm interested, we'll see later? Or do you have actual engagement and commitments from potential tenants?
So I'm talking about the latter, right? So as far as our project goes, like I said, the main tenant, the 1/3 that's pre-let, is from the sponsor itself. So that's not going anywhere. We know that, right? And what I said earlier was we still have institutionals, and the only reason we haven't booked yet is we're still structuring that entity that's going to take care of that with the sponsor. But we're still having institutional that are coming to us right now and saying, we're coming, in a couple of years, we need that space. Let's go. So it's not, we'll see. It's will be there. We need the space. And again, what exacerbates that is there's not a lot of options out there. So when they see a product that meets their requirements, they don't have the luxury of saying, I'll wait and see, if there's another one that comes out. There's not that many. So, and if they're able to kind of come in early as well, they can dictate to a certain extent the different equipments and some of the requirements that you have in the project. So that further incentivizes them. So yeah, what I'm saying is not we'll see, is we'll be there. Let's go.
Okay, good. A few questions. We almost at the hour, actually, but I still have one question for Hilaire and one for Nicolas before we conclude. For Hilaire, you know that, and you more aware than me, but elsewhere in Africa, except in Francophone Africa, all rents, at least international investors, are pushing for rents to be in US dollar, right? Because we don't want to be exposed to Kwacha, Naira, Cedi, whatever. We don't want to be exposed to that. And that created a huge issue because of the constant devaluation of local currency. Operators are getting their income into Kwacha and they need to pay dollars. It's creating a huge issue. We don't have that in Francophone Africa because it's a CFA, it's pegged to the euro. We know the story. I wanted to ask a question to all of you, but apparently Ouattara said that the ECO is going to be postponed by 2 or 3 years or 5 years. So we're still in Francophone West Africa, we're still in CFA franc, so there is not even a question there. But in Cameroon, in Central Africa, we read about a possible devaluation of the Central African CFA franc. I mean, how do you position yourself? Are your rents in CFA or are they in dollars pegged to the? How do you manage that?
Yeah, very good question, Ivan. I see Taslim laughing.
He's lucky
because he thinks they are better in West Africa. I mean, yeah, I agree that both the CEMAC zone and the WAMU zone are not in the same room when it's come to FX exposure. I mean, we tend to stay away from local currency. That's fundamental for us. In most of our projects, we have dollar rentals because we don't want to be exposed to local currency. But the project in Cameroon was a bit different because of the peg between the euro and the CFA. So virtually having a CFA rent means having a euro rent if you assume that the peg will stay there for the next, let's say, 5 to 10 years. And that's why we decided for this project to assume some of the local FX exposure. But whenever possible, we tend to sign a lease agreement in hard currency, either USD or euro. But when that's not possible, we can also look at the local currency exposure. And then the key problem here is the devaluation. Is there any risks of the currency being devalued in the short term? We took a view that devaluation in the short term, when I say short term, it's 4 to 5 years. It's not a concern for us because we look at the macro environment and our view was that before the devaluation happened, there are many signals that will probably help us to adjust a little bit. Having said that, we somehow managed to hedge our exposure to the local currency. The debt, for example, for the project, part of the debt is denominated in local currency, and also, I mean, the last time the devaluation happened, it was in 1994, and when you look at the problem with that region is that except Cameroon, most of the economy, Gabon, Congo, Chad, Equatorial Guinea, they are all oil dependent economy. I would say sometimes even 80% of the economy depend on oil. That's why when there is a shock on the oil sector, there is tension on the FX reserve for this country. But if you look at the FX reserve back in 2016, which was the bottom, they had like 5 billion USD FF reserve, which was the equivalent of 2 months of import. If you look at the number today, at the end of 2019, we were at 7.5 billion. At the end of July 2020, the FX reserve improved a little bit to 8.6 billion, almost 4 months of importation. And the IMF and some of the multinational organizations have been helping a lot by stepping in, by providing this country with FX exposure, and they all benefited from the emergency funding from the IMF in April and May this year. And we assume, even in the worst scenario, that during the next 12 months, if the IMF stopped funding those countries, at the end of 2021, they may find themselves with FX reserve of 5 billion. That's still enough. That's still enough not to actually crystallize the devaluation. And the way the zone work as well, because most of people, the way the zone work is that they have the guarantee provided by the French state basically say that if the FS reserve are completely depleted, those countries, they have access via the guarantee and the conversion mechanism. They have access to a revolving facility when they can actually exchange the CFA against the euro. But when they start using that facility, then the country need to take some macroeconomic adjustment to start boosting the FS reserve again. So the devaluation won't happen prior to the use of the revolving facility. And if after the revolving facility, they cannot boost the FS reserve, then the French and both central bank will sit down and decide if there will be a devaluation or not. And even that, the devaluation has some political implications. If you look at those countries, devalue the currency come with huge inflation. It means that basically we will have some civil in those countries, and it's a presidential decision. I don't see any of the president in the region today happy to announce a devaluation. So there's a natural edge against the devaluation unless there is a very, very bad macroeconomic environment in the world in total.
Which can happen because of COVID.
Yes, it can happen because of COVID, but we hope it won't happen either.
Of course we do. But do I understand it? I mean, I'd like to play a little bit devil's advocate. I mean, are you saying here that Actis is not concerned with the devaluation in general, or that you have enough rents in euros and US dollar to not to be worried that even if there is a valuation, basically you're not so much hit by the change in the currencies?
Yeah, I mean, I will say it differently. I will say in the short term, we are not concerned about a devaluation. And even in the scenario where devaluation happened, we have built it in the project, some hedging mechanism that will help us to actually mitigate the impact of a possible devaluation.
Okay, that's clear. Okay, Nicolas, I mean, you're not out of the wood yet, you know that. The 31st of October, election in Cote d'Ivoire in Abidjan. Obviously, there are a lot of discussions about who's going to be the next president, either the current one for his third term or another one. I mean, how does Duval navigate through that uncertainty?
Well, for us, there is absolutely no change. I mean, the first thing is that today nobody knows what will really happen. My side, I'm completely confident that even if there will be some trouble, this won't last. And of course, we are trying to get prepared. But honestly, we will do everything possible to continue to work. And to be frank, I even see that as an opportunity. You know, we want to show that even in difficult times, we will be able to continue to work. We will be able to continue to invest because we have several projects under development in Cote d'Ivoire, and basically we will continue to believe in the country. Plus, on the positive side, I'm pretty sure that after the election, beginning of 2020, there will be an economic rebound in Cote d'Ivoire. So for me, it's it's all fine.
Okay, I like the optimism. I mean, we all should be this optimistic about the future, especially in Africa. It's a long-term game, so we all know that there's going to be bumps, but we're not there to see what's happening in the next couple of months. I fully agree with you. To conclude now, maybe just one last word for each of you. How do you see your markets? What are the opportunities? And how do we go forward, basically being soon, I hope, out of this COVID-19? Let's start with Taslim, Hilaire, and then Nicolas for the final word.
Thanks, Ivan. Thanks, everyone who participated and organized, and to my co-panelists. I think our market, in particular, Senegal, is very interesting in as much as it's at an inflection point. We're really gonna, in terms of the nature of the economy, which is already diversified towards kind of a natural resource provider, which comes with its danger. But we feel like we've got the experience of already having a diversified economy that can even further be improved, so that we're at an inflection point where the market's really gonna kind of grow pretty fast as soon as we get out of this little COVID bump, like you said. So we're pretty excited, opportunities across all asset classes. There's good projects to be developed and money to be made. So and we're happy to work with anybody who's interested in participating in that in Senegal.
Thank you. Hilaire?
Yes. I mean, we're very optimistic about the prospect, despite some headwinds. But as I say, we have this income strategy that we're finalizing at the moment. But the COVID crisis, if the COVID crisis has taught us something, is that the e-commerce in Africa, for example, couldn't really replace the in-store shopping, because the infrastructure needed for that to happen is not yet built in the continent. When I say infrastructure, it's information, communication, and technology. So I think politics, business people now understand that this is probably going to be next for the continent, because those infrastructures need to be built. And in addition to our, let's say, our historical real estate segment, office, warehousing, retail, we are now looking also at this segment of what we call digital infrastructure, which is the combination of, let's say, data center, maybe as well tower as well. And then we think the space is going to be very vibrant in the next few years in the continent.
Thank you, Hilaire. Nicolas?
Well, I'm gonna keep to be optimistic. I mean, I love Cote d'Ivoire. I think it's a very dynamic country. I'm very positive about the market. If you look at residential, there is a huge lack of housing, especially social housing. If you look at the office market, there is a stock, but the main stock is in Le Plateau and is outdated and old. So there will be a demand as long as you know the right product and the right rent. And retail, same thing. I mean, the middle class is still growing. And only speaking about shopping malls, for me, there are still rooms in Abidjan to build 2 or 3 other shopping malls right now.
Very good.
Come to Douala, Nicola.
You take that off stage to discuss any further partnership. But I'd like to, of course, to thank everyone, all the panelists, Taslim and Gom with Certem, Nicolas Moreau with Duval, and Hilaire Gomo with Actors for their time. I think it was very insightful, and thank you again. And I hope I'll see you all soon at the API Summit. It's going to be virtual this year at the end of the month. And I think I can leave the floor to API and Kafir that I just see now.
Thank you, Ivan, and thank you to all the panelists. It was a really great session and really highlights the activity and the projects going on in the Francophone regions. So I think it was a great session. It's great to see some of these projects come to fruition and the activity carrying on amidst the COVID-19 pandemic. So it's definitely great and positive to hear the feedback from the panelists. Thank you to Ivan, thank you to the panelists, Taslim, thank you to Certain Group for making this happen. And as Ivan said, we'll be hosting our API Summit virtually come the end of this month. So we're looking forward to that. We've got multiple discussions and sessions, presentations, and a lot of networking, a lot of video calls. So it will really allow the market to engage. And then next week we'll continue with this series where we focus on Botswana. So thank you everyone, and we'll see you next week. Thank you.
Thank you, Kafir.
Thank you.
Thank you all. Cheers. Bye.
Thank you.